What's up guys, Ben here and welcome to Motivation to Invest. Diversify, diversify, diversify. It's something most great investors preach, but not many investors actually do. Most investors are too heavily invested into US stocks. Now don't get me wrong, I love US companies and there are some great ones there. But aren't we forgetting something? I'm talking about the second largest economy in the world. A country which economy is growing at 6% per year and has the world's largest population of over 1.42 billion people. Of course, I'm talking about the juggernaut which is China. China is not just a manufacturing hub, they have a growing middle class population with excess income and increasing consumer habits. Current estimates put the size of China's middle class at 400 million people, just less than 1/3 of China's total population. To put this growth in perspective, in the year 2000, just 4% of China's urban population was considered to be middle class, rising to over 30% in 2018. A study by consulting firm McKinsey & Company projects that 76% of China's urban population will enter the middle income bracket by 2022. With this increase in the middle class, it means excess income and increasing consumer habits. What makes China so special? Well, apart from the amazing growth, they actually restrict many Western brands, such as the major tech giants we know and love, from Google and Amazon to even Netflix. China has their own version of these companies, from Baidu to Tencent to Alibaba and even WeChat. The social media and e-commerce market in China is very complex and disintegrated. So in this video, I'm going to reveal my number one Chinese growth stock, which bridges the gap between Western brands and Chinese e-commerce. Be sure to watch till the end to find out whether I personally have purchased shares in this stock. Let's dive in. Welcome back guys to Motivation to Invest. Before we get started, it would really mean a lot to me if you guys can give this video a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, let's get into the video. So what is this mysterious Chinese growth company which I speak of? Well, the company's called Baozun and it's been dubbed the Shopify of China. The company helps some of the largest Western brands from Nike to Microsoft, Samsung, Burger King, Budweiser and even Häagen-Dazs ice cream to navigate the world of e-commerce in China.
We are Baozun, the leading brand e-commerce solutions provider in China. We connect brands to consumers through omni-channel solutions, helping their sales and profits grow. The size of the opportunity in China is huge. Retail sales are growing at over 10% per year, and more shoppers are making their purchases online. And their appetite for brand e-commerce is growing even faster, with the market increasing from 4 billion in 2010 to an expected 379 billion by 2017. And we are perfectly positioned to take advantage of this huge and rapidly expanding market. We already have a 20% market share, and more brands are looking to us to execute their e-commerce strategies. Why? Because e-commerce in China is different and complex. Our expertise lies in offering brands tailor-made, end-to-end e-commerce solutions that fit the Chinese market. From official online brand stores to China's largest online shopping marketplaces like Tmall and JD.com, social media platforms like WeChat and Weibo, mobile stores, and online to offline. And our deep understanding of these different channels means we're able to combine their strengths to deliver sophisticated omni-channel solutions. These deliver a seamless shopping experience, helping to deepen brand loyalty amongst consumers and in turn, increase sales. Technology is key to our success. Our proprietary systems fully integrate with our clients' back-end systems to enable real-time data tracking and analytics. And we provide store operations, digital marketing, customer services, warehousing, and fulfillment. We are trusted by some of the largest global brands, like Philips, Häagen-Dazs, the NBA, and Nike, and many others across a range of categories. We are constantly innovating and changing, introducing new products and services, adding brands to our platform, expanding our offer across the rest of Asia, and leading the way in Chinese e-commerce. Baozun, connecting brands to consumers.
In China, it's just not simple for a Western brand to set up an online store, so Baozun acts as a conduit between Western brands and China's bubbling e-commerce market. Almost any large Western company heading to China needs to consult with Baozun before doing business there. They are a one-stop e-commerce provider in China. From the front end, they do all the digital marketing for a brand, such as online advertising on all the Chinese platforms, and even SEO or search engine optimization to get brands a higher ranking on their version of Google search called Baidu. Then they will complete the sales and even do fulfillment at their warehouses in China. Looking at the revenue model of the company, we can see they have 53% of their revenue from services with a service fee model and consignment model. They also have product sales, products pre-purchased by the company, which takes an inventory risk. This makes up 47% of their revenue. Baozun selects and purchases goods from brand partners and their authorized distributors and sells goods directly to consumers through official brand stores or official marketplace stores operated by Baozun on behalf of Baozun's brand partners. Right guys, so diving into the numbers for Baozun. Here we are on Stockopedia. So I always get asked on this channel, which stock research platform do I use? Well, I use Stockopedia. If you guys wish to check it out, I've actually been given an exclusive 25% off discount link, exclusive only for the viewers of Motivation to Invest. So if you're interested, check that out. I'll leave it on the link below. You can sign up to the platform, see what you think, see if it fits your investing style. Having said that, let's dive into the numbers for Baozun. So here we are. It's a technology stock, adventurous, mid-cap and high flyer. What I love about Stockopedia is every stock is given a stock rank. So here we have a stock rank of 74, momentum of 86, value 36, and quality of 71. So it's saying it's a great stock, lots of momentum behind it. Value's not incredible, but you'd expect that from an e-commerce stock during this time. Looking at the share price, it's currently around $42 per share. Dropped around March, it dropped around $25 during the 2020 crash, but it seems to have hovered around this area between 40 and 50, even went up to $60 over the past 2 years. So whether that's a sign that it's been overlooked by the market or the company's just been going through some troubled times is yet to be seen. But it seems that looking at the rest of the details for the business, that it's actually been very, very good. So maybe it is overlooked in the market compared to, say, Shopify. So over the past few years, the revenue has had an average compounded annual growth rate of over 35%. Now that makes it a true growth stock. But that's not all. This business is actually profitable, unlike many of these other growth stocks out there, which are actually unprofitable. It just seems the trend these days that these companies can just come to market and they're not profitable and we're just hoping they become profitable and we invest into them. But it's profitable business, which is a great sign. Lowers the risk for you guys as investors. So as you can see here, revenue is predicted to increase for 2020 up to 9.1 billion and for 2021. Forecasting net income is also forecast to increase up to 2020, 2021, and earnings per share is forecasted to increased. Diving into the analyst consensus, this is another great feature of Stockopedia. It's got analysts from all over the world, from the major financial institutions. You've got people here from Deutsche Bank, Credit Suisse. Basically, they've analysed the stock in an extremely detailed manner and thus give their expert opinion on whether it's a buy or a sell. So as you can see here, 3 say hold, 6 say buy, 5 are strong buy. So no one is saying sell for this stock, which is a great sign. So as you can see here, the sales compound annual growth rate over the past 3 years, which is a good time period to look at, is 29%, which is fantastic. Earnings per share, 45% growth over the past 3 years. Sales growth, 18%. Current ratio, now this is a really interesting factor. So the current ratio is actually the short-term cash to the short-term debt. So it's basically how much cash does this business have on hand to cover its short-term debts. That's those due within, say, 1 year. Now, usually I look for companies with at least a 1.5, say a 2 on their current ratio. Now, a 2 current ratio basically means that the business can cover its debts at least twice in the short term. This has got a current ratio of 3.22, which is incredible. It means it has plenty of cash on hand to invest in growth of their operation. Great sign to see. Very, very small risk of going bankrupt with a high current ratio. Price to sales 2.44, not bad for the industry. P ratio 25.8. Yeah, it's not a value stock, it is a growth stock, but still, compared to the industry average, it's not too bad. Market cap 2 billion, so it is still a small company. Enterprise value of $2 billion. Revenue around $827 million. Overall, Baozun is a leading strategic partner for Western brands looking to get into the world of e-commerce in China. Their sales growth rate over the past 3 years has been nearly 30%. Their balance sheet is strong and they're profitable, which seems like a rarity these days for most of these growth companies. The risks are the fact that it is a Chinese company, so should there be a US-China trade war, I don't think this will impact the brand directly. However, it may impact them by the middle class population of China having less income, thus spending less on the platforms in China. So have I personally bought shares in this stock? Well, if you guys watch this channel regularly, you know a unique thing about Motivation to Invest is that I personally reveal which stocks I'm buying. So yes, I have bought a small stake in Baozun. An e-commerce growth stock combined with the massive Chinese market seems like a great opportunity. So what are your thoughts on Baozun as a business and as a stock? Let me know in the comments below and I'll join in the discussion. And also, I've got a special treat for you guys. So if you guys would like a free share worth up to $200 or £200, then check out the link below for Trading 212 and Stake. When you sign up and deposit, you get a free share worth up to £200 or $200. In addition, if you guys enjoyed this video, I would really appreciate it if you give it a big thumbs up. That really helps out with the YouTube algorithm, which allows me to create more great content like this for you guys. In addition, if you want more investing tips and exclusive stock market picks, which I personally am investing into, then you should definitely subscribe to this channel and turn that notification bell on. With that being said, I'll see you guys in the next video. Invest safe.